Hey, what's up, YouTube? Hope everyone is good. Hope everyone is lit. Today we're going to be talking about the volatility 75 index. Yo, I thought I already set it up on my chart, but it's showing the 25 index. Let's just quickly hop into the 75 index. So, yeah, a lot of people are not really generally aware of the volatility 75 index, but I'm going to just give out like a mini explanation of what it is, how to like gauge, how to understand it, and maybe like a bit of a tip off as to like how to trade it. So one thing, guys, you must understand about the VIX 75, that's what it's also called, is it's actually an instrument that tracks uh the fearness in the market, or it's also called a fear gauge based on the S&P 500. So you guys, I'm sure you know the S&P 500. It's basically the top 500 companies in the US stock exchange. So yeah, basically if there's more fear in the S&P 500, if there's predictions that anticipate that maybe the US, the what you call it, this thing is running away from me, guys. Yo, don't slaughter me in the comments there. But yeah, hopefully you guys get my point, what I'm trying to say. But yeah, basically just to put it in a nutshell, it's basically a fear gauge of the S&P 500. So what happens is, one thing I need you guys to understand is that these two are definitely closely related. Um, how they have what we call an inversely proportional relationship. What I mean is, most likely, if you see the S&P 500 rising over a 30-day period, you would most likely see the VIX, the volatility 75 index, decline. So, which means if the volatility index is rising, the S&P 500 is declining, and vice versa. I hope that makes sense. But yeah, getting into it, let me just not waste too much time explaining the theory of what it is, because most of you, I'm definitely sure you guys just want to know how to trade it and how to operate it. So one thing I can tell you guys with this specific instrument is you need to understand what the general sentiment of the market is. So what I'm basically saying is, if you want to trade the volatility 75 index, you just have to understand where is it basically headed for the day. Understand? Am I making sense? If I'm making sense, just um, type a comment there in the comment section and just let me know that it makes sense. So yeah, basically what you do is look at I'm basically going to be analyzing the volatility 75 index. I'm not going to be analyzing the S&P 500, but I need you guys to understand this. First of all, I need you guys to be looking at the daily chart. That's one thing, that's the key step that you need to understand when it comes to trading the volatility 75 index. Let me just call it the VIX 75, because me saying volatility 75 index sounds very long and is a bit annoying. So I'm just gonna quickly chop it up and call it VIX 75. So every time I say VIX 75, yeah, you can just like the video while you edit. So yeah, let's get into it. So looking at this right now, this current candlestick, obviously right now it's almost closed, but we both know that the volatility, the VIX 75, it actually never closes if you think about it, because it's open like 24/7 from all the way from Monday till the next Monday. Yeah, 24/7, 365. Unless if there's like some anomalies in the market, then that's when I think it could be closed. But other than that, yeah, it's always just moving. That's why I like this pair. So now, looking at the daily chart, with the current candlestick of the daily chart, we can all see that this thing is bearish. So what does that mean? It means since the candlestick is bearish, there's a strong presence of sellers in the market more than buyers. Understand? So basically what I'd like to do is usually hop into the smaller time frame, which is my H4. It's not actually a small time frame, that's a huge time frame when you're talking about fix 75, according to me. But hey, that's a discussion for another day. That's a relative statement. Me saying the H4 is a small time frame. It's a relative conversation based on what type of an investor you are. So I just look at the H4, and the H4 is also giving me the same vibe, but it's giving me like a mini consolidation here. And the current candlestick is what is bearish. So what I usually do, I just hop into the 1 hour chart just to get a vibe as to like, okay, what is actually going on here? So what am I gonna be looking at? Since this thing on the daily chart, on the 24-hour chart, as you guys saw, it was bearish. I'm gonna be looking for sell opportunities. So basically, what I'm just gonna do is I'd usually hop in from all the way from the daily chart to the 1 minute chart. So what I'll do here is quickly hop onto the 15-minute chart just to have a look at it, just to like how it's behaving and how it moves. One thing, guys, I need you guys to remember is always treat the chart like an investor. Do not be here looking to make quick ins and outs, even though it is very much possible to make quick cash out of this. But I want you guys to be more long term. I want you guys to have a more long term mindset to be able to capitalize long term. I don't want you guys to be making money then blowing it a couple of seconds slash hours slash even days later. I want you guys to be like constantly growing when it comes to the VIX 75. So now coming back to this, what I usually look for is what we call order blocks. So I'm sure most of you are familiar with order blocks, but just for those who are not familiar with order blocks, it's basically if a market is buying, then there is a sudden turn or shift in direction of the momentum of the chart. I would just look at the pinpoint where it shifted, where it started declining. So, for example, if you just look at this candlestick right here, this green candlestick right here, it was bullish. It was the last bullish candlestick, and then the next candlestick was just bearish, and it was huge. So usually when I mark an order block, is basically the wick of that candlestick to the next from the beneath. This English is not English, you guys, but hey, just bear with me as long as you get my point. But yeah, what I'm basically saying is I'll just mark it from both the last. If the market is bullish, I'll just mark it from the last and it's first wick pinpoints. So now looking at this is what I call an order block. Basically just marking this area like right like this between this candlestick and this bearish candlestick right here. Hope it's making sense, guys. If it's not making sense, just say that in the comment section, then I'll make another video as to like how to understand it even better. So yeah, these are usually the places where I just look for entry opportunities. So even like right here, when the market made an order block, it came back down. When it came back up, when it touched this area right here, it started shooting downwards. So which means once you get into like this level of the order block, this is where I'm hoping to like catch like a nice entry and just maybe write it down depending on wherever it is gonna go. But usually I would aim for anywhere from a risk to reward ratio of 1:4 going upwards. So if it was just my normal self trading, I would have entered there and just aim for like a 1:4. And trust me, guys, depending on the lot size you're using, this can be a really fruitful and very lucrative pair. Not pair. This is not a pair. This is a instrument. It would be a very lucrative instrument to trade. So just looking for a 1:4 bagger, that is enough from my side. Unless if you want to go monster and just maybe aim for a 1:10 or 1:20, it is way definitely up to you. but I'd usually just minimum aim for a 1:4. And now, since we no longer looking at this other block is already passed. If you guys can guess the next other block, just pinpoint it on the chart on yourself. I'm just gonna give you guys a second to like pinpoint where it is. And 3, 2, 1. I'm sure you guys have pinpointed where the next other block is that I'm definitely looking at. It's definitely this small spot right here. So I just usually just target this, and if it happens that the market happens to like come back and retrace at this point, then I'll be looking for like sell entries at this point, trying to go down with it. And yeah, I'm sure you guys understand what that means. But don't just look at these highest and lowest points of the market. You guys need to understand that even these smaller points, I consider them as order blocks as well. So basically, just to quickly explain an order block is basically where it's a spot on the market where there's an accumulation of orders. So which means there's a lot of orders basically that are not filled and they need to be filled. I hope that makes sense. So if the market is bearish, which means they still sell orders here that need to be filled so the market can come back down. So in this case, since we are bearish, I'll just be looking to wait for the market to like probably retest up until this point, and I would look for my entry from this point going downwards. If not this point, then this is the point I'd be looking to enter. But just to give you a general sense of how I'd enter, I'll just place in my trade here, and then just look for like I said, I usually aim for anything minimum is like a 1:4 risk to reward ratio. Let me just edit it like this. I'm sure you guys can see. Yes, this is my risk reward ratio 1:4. I just enter there and then look to like bag this thing all the way down if it is going down. But remember, always follow the trend, guys. Do not try to be Bill Gates. You're not Joe Biden's cousin, or in this case, he's still the president, so you wouldn't know where the market is gonna go. No one can predict the market. You can only speculate the market. That is one of the most important advices I can give you. And if you remember that, it can take you very far. So yeah, just basically understanding these order blocks, they can really take you very, very far. And remember this, guys, this works on like every time frame. I can just quickly like hop on the 1 minute time frame and just look for like other blocks even on the 1 minute time frame. Even though I don't usually suggest it, but that's where I'll usually use it to catch entries, like those crazy sniper entries. It's basically a sense where I'd usually look for a sweet spot to enter into the market. So another order block, the latest order block I can see here is basically this point right here. I consider this an order block. I consider what else? There's a lot of order blocks here, but yeah, basically this price right here is where I generally look for an entry opportunity if the market happens to like come back up and retest this area. I'd look to go here and just enter the market and look for a short position there. And I would generally just enter it, aim for a 1:4, and then that's it. It's not even something that is like super complicated. It's easy to trade. Remember to make your trading, keep it simple, keep it stupid. The more simple and stupid it is, the easier it is to trade, and the more clearer your head is when it comes to the charts. So I need you guys to always remember that. Don't need to complicate your chart with all these crazy indicators, and I just need you guys to always remember to keep it simple. And yeah, that's it. Can aim for 1:4, 1:5, 1:50, up to you, up to your appetite and your greed levels. Greed is good, by the way. Don't ever let anyone tell you that greed is not good. Obviously, a certain level of greed is good, not all types of greed. But yeah, guys, that is just basically what goes down with the volatility 75 index. I don't want to make this video too long, but yeah, I'm sure you guys got a general sense of how to trade it. And if it was a buying market, basically what you should do is, you see whatever I just did, just do the opposite. If it's an uptrend, Let me just make an example for those of you who maybe might not be quick at catching stuff. Okay, let me just do this. Here's an order block right here. Let me just use this order block. Here's an order block right here. I generally just look for a 1:4 bagger right here and then enter position here, put my stop just below the order block. And yeah, if it doesn't reach in 1:4, hey, that sucks. But the aim is always aim for a 1:4. Then you in, you get into the market, you're out, you just bag just like that, then you're good. So basically, this is the vice versa of the downtrend when you're looking to buy into the market when it comes to VIX 75. But otherwise, guys, I hope everyone is good. I hope everyone is lit. And don't forget to like, subscribe, and share the video. Don't be a hater. Press that like button. I'm not going to stop the video. I'm going to wait for you to press the like button. Then, yeah, afterwards, I can stop the video. I'm generally just waiting for you to press the like button right now. You are the only one who could end this video. And yeah, just by pressing the like button. Don't be a hater. But otherwise, guys, thanks for watching, and yeah, subscribe like I said, and you know the vibes. Shout out.